You've worked hard for your money. Now make it work for you. This is Dollars and Cents with Mills, McCaghren Associates on KTAB Plus.
Welcome to another Dollars and Cents with Mills, McCaghren Associates. And today we're talking about something that a lot of people put off or avoid, and that's life insurance. And it's one of those things that you probably need, but you're not always sure where to start or when it even applies to you. So Robert Mills of Mills, McCaghren Associates joins us today to help us out and help us understand life insurance a little bit better. So thank you so much for joining me today, sir.
Glad to be here, Adam.
Thank you. So let's start simple. We'll just start at the basic level. What is life insurance and why does it matter?
Okay, so life insurance, you pay the insurance company a premium. There's a lot of variations to that, and we'll discuss that later, but you pay the insurance company a premium, and they insure you for a death benefit. You can look at it similar to house insurance in that you're buying something to cover something else. And so you're buying it to cover your life, and it will pay a tax-free death benefit to the people that you name, which are called beneficiaries.
I feel like I know the answer to this, but let me just ask it. Who really needs life insurance?
Everybody needs.
That's what I thought the answer would be.
Yeah, I mean, from young to old, when you're young, a young earner in a young family, you want to protect your spouse in the event of your premature death, so that they may have enough money to fund the family and get by and not be in a poor situation because you exited life early. As you get older, those considerations become protecting retirement. They become protecting yourself in older age. Everybody, there's a place for life insurance for everyone.
Exactly. It's a lot of people think, that's for older people, but it's really something that young folks should be thinking about too. I mean, let's say a minimum age. Like when should someone just say, you know what, I'm working, I need to get life insurance, it's available through my job. When should someone start thinking about this?
Well, the earlier you buy it, the cheaper it is. And so, we've helped 18-year-olds that are working in the workforce or going to college buy life insurance. It's very inexpensive at that age. And you can buy it for long periods of time and lock in that price at an age 18 or 20-year-old price. So we really encourage folks to buy life insurance early. The closer we get to death or the older we get, life insurance becomes a little more expensive because there's less time for the insurance company to receive premiums.
That's exactly. It's a business at the end of the day for these insurance companies. So you want to make sure they're getting a good deal and you're getting a good deal if you get in the door early. It's kind of like starting a 401k. If you start it early, you're going to be a lot more happy with yourself.
That's right.
And this is really more about protecting and helping out your loved ones. So what happens financially to a family? Worst case scenario, there's a death and there isn't that coverage there.
Well, just the basics of just a funeral costs, $10,000 to $15,000. If you have cremation, that's a little bit cheaper, but just that basic cost could be very hard on a young family. And then if you have, let's say, a mom's at home with the children, and so she's a homemaker, and so he's the primary breadwinner, and he dies. Where does that leave the mom? She has to enter the workforce. She has to provide for the kids. Wouldn't it be nice if for $25 or $30 a month you had life insurance protection that would take care of that mom and the kids?
You got me thinking about, my benefits at work. I'm just like, okay, I think it's included, but I need to really look and see what it is. So, what's the importance of understanding a policy if you already have one and making sure that, what all is covered and do I need to get supplemental? Is that something, a question that you get?
I do, and I tell folks all the time when they ask about their workplace life insurance and other benefits too, that that's a great place to get your insurance. You can usually get it at a good price. You can get it in a group mode, maybe that's even a better price. You can have it payroll deducted. It's not, you don't have to write a check for it or have it deducted from your checking account. So it becomes a good way to buy insurance. Usually you need more than what you can buy just at the employer. So that's when you look outside of that. And then the question becomes, how long do I want it to be guaranteed for? 10 years, 20 years, 30 years? Or do I want it to be a lifetime type of policy? And that begins a different discussion.
What's a mistake you see people making early on in this process? They're trying to get started. What's some errors that we can hopefully avoid?
Well, I think one of the major errors is the get around to it syndrome, and that is, I'm going to do it. You can even apply that to wills and trust and estate planning, that we're going to get around to it, but then we never get around to it. I've even, after 40 years of doing this business, early on, I had that same syndrome. It's something that really catches us and gets us in a situation where we've waited too long. So the earlier you plan for most things in life, the earlier you plan, the better off you are.
That's you're singing my story here. It sounds like I'm like, okay, I really need to check because it's out of sight, out of mind, and I really need to stop putting it off and take a look. So we're going to keep talking about this. We're going to keep talking about life insurance, and once someone realizes what they might need life insurance, the next question becomes what kind. So we're going to learn more about that when we come back here on Dollars and Cents.
You've worked hard for your money. Now make it work for you. This is Dollars and Cents with Mills, McCaghren Associates on KTAB Plus.
Welcome back to Dollars and Cents with Mills, McCaghren Associates. I'm joined by Robert Mills of Mills, McCaghren Associates. And so today we're talking about life insurance. And in this first segment, we talked about what it is. So in this one, I want to, get more into the weeds, and we'll talk about how it works. So, I hear a lot about the term and permanent life insurance. You have term insurance, life insurance, and you have permanent life insurance. So tell me, what the difference is between these terms.
Yeah, that's a good question. And really there's three. There's term insurance, there's universal life insurance or indexed universal life insurance, and then permanent whole life insurance. So term insurance is you buy a fixed amount of death benefit for a number of years, and the price does not go up for that number of years. Now, once you surpass that number of years, the price gets really ugly. But for the first, like if you buy a 20-year term insurance, for instance, a 20-year term insurance policy, you buy that for whatever death benefits you want. The price is usually a pretty good price for the first 20 years. And you never pay more than that, and the death benefit is tax-free. However, once you get to the 21st year, the price goes up exponentially, and you typically can't afford it and have to rebuy new insurance. But again, at certain ages, you can buy as long as 30 years of a guaranteed premium. If you're 25 years old, you can buy 30 years to age 55 of a guaranteed premium at a very reasonable cost. Now, you got to understand the reason the insurance company does that is because life expectancy, their tables, it's all a numbers game. And life expectancy for a 25-year-old is not to 55, it's to, 75 or 78. So that's why the insurance company can give those prices. But, as we know, is the unexpected happens, and people die young. People die earlier than they hoped for, and families are in a financial bind. Now, indexed universal life is an insurance policy where you pay premiums higher than term premiums. You have a fixed life insurance benefit, and you have a cash account or a cash value account that grows, that's indexed to the markets. It's not in the markets, just compared to the markets. It has some guaranteed functions to it, similar to an indexed annuity that we've talked about in the past. So you can utilize that as both life insurance and a cash value savings plan that's tax deferred. And moving forward, you can actually take money out of that cash account on a tax favored basis, so it kind of works multiple levels, right? Death benefit, tax favored. Taking money out, and as well as a guaranteed premium for most of your life, if not all of your life. And then guaranteed whole life insurance is the most expensive insurance because it guarantees no matter how old you get, you have the insurance. And so you're kind of playing the interest rate game or the market game on the indexed universal life or universal life. But if you do it right, it can last your whole life too. But the whole life insurance is the most guaranteed you can do for having a premium guaranteed for the rest of your life or a death benefit.
So it's definitely, like most of the things that you deal with in your work, it's not a one size fits all thing. So,
No.
what's the importance for someone to make sure that they get the right type for them in their situation and they don't get something that's maybe out of their price range or maybe it's not exactly what they need for this stage in life?
Yeah, when we're talking to younger families, we typically will try to get that coverage for them based on what the income level is in the home and what the debts are level is in the home. We try to get that to a point where we can buy the insurance on a very cost-effective way and for a 10, 15, 20, or even a 30-year time frame, knowing that there's going to come a time when you've got to rebuy the insurance at some point. And of course, the gamble there, if you don't have permanent insurance or universal life insurance, is that you could have a health problem and have maybe some issues getting it in the future. But for the most part, it's the best economical way to do it for a younger family. Now, as we get older, and there's more money to spend and more money to save, it makes sense to maybe do a more permanent level of insurance that becomes another investment vehicle for you and dovetails with your 401k, your savings, your CDs, and things like that. And it is on a tax favorable basis.
So let's talk about the actual function of the policy. So what actually happens when someone passes? What happens to the policy? What wheels start turning?
Yeah. It's interesting that most people just take life insurance, the idea of life insurance, and stick it in the trunk back there, and they really don't talk about it much. And there's not a lot of good knowledge out there about it. But view for the normal buyer that's trying to just cover emergency situations and income and debts and things like that as in a younger family situation. Think of it like homeowners insurance. You have to buy homeowners insurance. You buy car insurance. None of that gives you cash value or a benefit, except that it gives you coverage in the event of a loss. And so that's the inner workings of a life insurance policy. It's going to give you so much death benefit coverage for a price at a certain level of time for that price. And so the inner workings of that, I think, to understand is that you're covering a situation, and it's really more important than the home or the auto if you think about it, because you're talking about a lifestyle, you're talking about kids going to college, you're talking about a spouse who could be left penniless. There's a lot of considerations that would make life insurance, in my opinion, much more important than the loss of a house fire or something like that.
I know a lot of people are thinking, life insurance, that's expensive. And maybe they're thinking about, like you said, the whole life insurance, which is that is more on the expensive side. But I mean, compared to dealing with this kind of loss without that coverage, a lot of people think that it's expensive or maybe too expensive, and maybe that's why they're putting it off. So what can you say to people who may be thinking that, and that's the reason they're putting things off?
Yeah, I would say that based on what your income level is, I would tell you that you can probably buy the life insurance that you need for you and your spouse, and you can buy it on your children too, which guarantees insurance for them for a long time too, because kids get sick and get uninsurable as well. So you can do all that for a very efficient cost. I think more so than the cost of life insurance is people need to realize the need for the life insurance. What are we getting here? What's the benefit of this? And I've ran into folks that I've counseled with that they don't care what happens after they die, right? I mean, that is a situation. But for the most part, most men, most women want to make sure their family's taken care of, even when they're gone. And so that's the value of life insurance.
So we're going to take another break here, and then we're going to come back and we're going to talk more about the bigger financial picture, because this is really big picture stuff. So when we come back here, we're going to have more questions answered by Robert Mills right here on Mills McCaghren Associates, Dollars and Cents.
You've worked hard for your money. Now make it work for you. This is Dollars and Cents with Mills McCaghren Associates on KTAB Plus.
Welcome back to Dollars and Cents with Mills, McCaghren Associates. Today we're talking to Robert Mills about life insurance, and we've talked about what it is and how it works. And I have another question for you about getting that coverage started. And now, some people, they may have health concerns, health issues ongoing. They already have these worries, and maybe they're thinking about getting a life insurance because of that. What factors affect the cost of a policy, and can someone get life insurance if they are already sick or have these health issues?
Yeah, that's a great question. As we get older, we have health issues that kind of tag along with us, me included, right? So, but things have really changed in the medical underwriting part of life insurance. As everything else has progressed and modernized, so has the underwriting of health insurance issues. So back 30, 40, 50 years ago, some of the issues that were uncovered back then in writing insurance might cause a decline and you couldn't get it. And nowadays you can get it. And so you usually, if you have, there's certain things that if it's stabilized by medicine and like high blood pressure, and you blood pressure's okay now, you take medicine for that. Mm-hmm. Things like that, then there's really not a penalty against you for that. Weight can cause, height and weight can cause issues and things like that as far as medical underwriting. But for the most part, we can get insurance on folks. You might have to pay a little higher premium if you have substantial health problems, or if you have health problems that are they've been pretty bad over the last 5 years or 10 years, then you might want to look at guaranteed insurance, and that's out there. So the way that works is you pay a premium in the first 2 years. The death benefit is the return of your premiums plus an interest rate. But starting in the third year, then you've got the full-blown death benefit that the insurance company agreed to offer you for the premium. So even a person who has a cancer history or heart attack history, and in a lot of cases can still get insurance. So don't think you can't. It might be a little lower death benefit than you wanted, but it is good coverage for that price and for that condition.
It's better than nothing.
It's better than nothing.
All right. So, and we were talking during the break, earlier in the show, we talked about the employer-given insurance. So if you work for a company, you might have life insurance as part of your benefits. But we're coming up on a small business week, mm-hmm. And we're thinking about employers and businesses. So, mm-hmm. Tell me about should a business consider giving this kind of life insurance to their employees as a benefit? What should they be thinking about, and is this something that they should be considering?
Yeah, that's a great question for business owners, because let's take this answer a couple of directions. The first direction would be the employees of a business owner. So the employer, if he provides insurance benefits for his employees, then he ties the employees to his business, right? They appreciate the benefits. Maybe they stay and don't go somewhere else to work. And then if he has a key employee that, just helps the business run, may even end up buying the business later when the business owner is ready to sell it, he can put on that employee what we call a key man insurance policy, which would cover the business owner, help the business owner if that key person died. If they are in a car wreck or some other thing happened and they died early, when it would be a really harmful effect to the business, the business owner would receive death benefits to help towards replacing that employee and making it when sales go lower or whatever happens because of the result of the employee's death. And then you can also use life insurance as a business owner as golden handcuffs in addition to a retirement plan, which we always think you should do first, 401k or 403b or IRAs, simple IRAs, those kinds of things. The business owner can put a key man or a split, what we call a split dollar life insurance policy on the employee, and tell the employee that I'm going to split this death benefit with you and your family if something happened to you early, but all the cash value that grows in this policy, tax deferred, that can come out of it on a tax-free basis via policy loans. The IRS doesn't tax loans, so you can use that asset to take loans out of it in retirement. And believe me, the policy works. I've seen it work. But now you've given the employee another retirement source besides their 401k, and the business owner's putting all the money in. So In addition to that, the business owner themselves can do a split dollar with their own corporation or their own company and be able to put more money than just what they're limited to in a 401k or IRAs, and have a benefit for the family, a death benefit, but more importantly, in this particular case, build up a lot of tax-favored cash value in the business owner's policy for when they retire.
I'm glad you mentioned 401ks and IRAs because, I'm thinking about, there's a lot of things going on with the bigger financial picture. So, how can life insurance fit into that big long-term, financial or retirement plan? And then, at the same time, I feel like I waited a little too long to start my 401k. Maybe it was 5-10 years ago I actually started. So, how does this fit into the larger plan? And I mean, if someone's waiting too long, should they just jump in and just do it as soon as they can?
They should. The biggest planning issue is procrastination.
Mm-hmm.
Put it off, put it off, put it off. I don't care what stage of life you're in, starting is better than not. Mm-hmm. And so, but what you can do with life insurance, as an addition to your savings and 401k and other things, is you can utilize that as an investment tool. I won't get into it today, but my business partner offers variable life insurance, and that's a stock mutual fund investment life insurance policy. He's the one licensed to talk about that, and so, but we do have that available through him. So, but then on the fixed side, on the indexed universal life, where you can earn market linked interest, you can grow a cash savings plan besides doing your 401k. But the neat thing about that is for the family man or the person or businessman or whoever that's doing that is, if you don't live long enough to grow it to retirement and you die, your family gets the death benefit tax free, which is going to be equal to or way higher than what you had put in and what you saved in that. So it's kind of a dual purpose plan. I think you ought to have an IRA, a 403, a 401k, savings plans and annuities and life insurance, and bring all that together as you can afford it, and have a multi-point retirement plan.
We're coming to the end of this episode, and I feel like we've learned a lot. I've learned a lot. And I hope that maybe we've helped some people understand this and maybe set aside some fears and let them know that life insurance could be for them as well. So if someone's listening and they want to get started, how can they get started?
Just give us a call, 325-673-8933. You can email me at robert@MMAinvest. That's Mary Alvin, invest.com. You can go to our website, www.millsmccarran.com. You can reach us many ways. Google us, but come in and we'll give you. We're not going to charge you to have a consultation to discover what your options are for life insurance or annuities or any type of investing. We don't charge for consultations, initial consultations, and so we would love to help you. And that's how you get in touch with us.
All right. Robert, thank you so much for joining me today. And I want to end us on a quote that you sent me as we were setting this up. It says, life insurance isn't really about money. It's about making sure that the people you love are taken care of no matter what happens. And I think that sums it all up.
Absolutely. Thank you, Adam.
Robert, thank you so much for joining us today. And I hope to learn some more from you. If you'd like to contact Mills McCaghren Associates, they're located at 1500 Industrial Boulevard in Suite 102. You can give them a call at 325-673-8933.